August retail sales reporting an upside surprise, climbing 0.7% versus expectations that it would actually fall 0.8%. Meantime, JPMorgan downgrading its outlook for GDP in the third quarter to 5% from 7% ahead of that print, in part on Delta fears and consumer spending fears. Let's bring in Mike Feroli, chief U.S. economist at JPMorgan. Mike, great to see you as always. Thanks for joining us. I guess particularly given the GDP downgrade earlier in the week, that you were a little surprised by the retail sales strength.
So we were actually looking for a little better number on ex-auto retail sales, and it came in even stronger than we were looking for. That said, I think it's important to note it came against downward revision to July, so the net actually left our adding up of consumer spending in the third quarter pretty much unchanged at around 2% annualized growth. So the net of a little bit better August and a worse July was kind of a wash in terms of how we were looking at GDP right now.
And so sum up for us why you did downgrade GDP.
Right. So I think it's first just one thing to say about the retail sales report. That relates to consumer spending on goods, and that's about a third of all consumer spending. The other two-thirds is, of course, services, and that is the part of consumer spending that's more sensitive to pandemic issues, so travel, tourism, movie theaters, et cetera. Those things are not covered in the retail sales report, and there's a lot of reason to and various pieces of data that suggest that part of consumer spending is actually looking a little soft here particularly in August and September. So that's one important reason why we lowered our sights on Q3 Delta and what it means for consumer spending on services. The other thing is some of the supply chain issues, particularly affecting the auto sector. So motor vehicle sector may be only 3% of GDP, but it's a very important 3% when it comes to the quarter-to-quarter variability of growth. And what we're seeing there is that production really just is not picking up off of pretty depressed levels, even though auto inventories are extremely low. And so the shortfall in auto production and what that means for inventory building was another important reason why we took down third quarter GDP.